We are covering these 6 top big cap stocks with large percentage moves today. While watching bullish price actions, let us inform you. Our review on RNAZ. TransCode Therapeutics Incorporated is diving deep into the oncology world, aiming to shake things up with its unique approach to treating metastatic cancer. The company is working with something called the TTX nanoparticle platform, which is all about delivering RNA-based therapies. Their lead candidate, TTX MC138, targets tumors that overexpress a specific biomarker, microRNA 10B, that's linked to cancer spreading to other parts of the body. If this treatment can work as intended, it could be a game changer, offering a new way to treat cancer that goes beyond the typical chemotherapy or radiation route. But it doesn't stop there. TransCode has a few other tricks up its sleeve. One of their other big programs, TTX SIPDL1, uses small RNA molecules to target a protein called PDL1, which helps cancer cells hide from the immune system. By blocking this, they're hoping to give the immune system a better shot at attacking the cancer. This could play a huge role in future cancer immunotherapies. Then there's TTX Riga, which targets the tumor microenvironment and aims to activate the body's natural immune defenses. If this can work as planned, it could help treat tumors that are otherwise tough to target. They're also working on a gene editing platform, TTX CRISPR, that could repair or eliminate cancer-causing genes in tumor cells. This is pretty wild stuff. It's like trying to go straight to the root of the problem and fix it at the genetic level. And don't forget their mRNA cancer vaccine platform, TTX mRNA. With the success of mRNA technology in COVID vaccines, TransCode is hoping to apply the same principle to create more personalized cancer vaccines that could work alongside other treatments to fight cancer more effectively. All of this is still in the early stages, though. Most of their therapies are in preclinical trials, so it'll take time before we see any of them hit the market. That's the reality of biotech. It's a long road, and not every trial leads to a home run. For investors, that means there's a lot of potential upside, but also a fair amount of risk. The next few years will be crucial for TransCode. If any of their therapies make it through the clinical trials successfully, they could be sitting on some pretty revolutionary treatments. But until then, it's important to remember that biotech stocks come with plenty of uncertainty. If you're willing to take on a risk, though, this is definitely a company to keep on your radar. The science is exciting, and the potential is huge, but as always, patience will be key. Our review on LSB. LakeShore Biopharma Co Ltd, formerly known as YS Biopharma Co Ltd, is carving out its space in the biopharmaceutical world with a strong focus on developing vaccines and biologic therapies to tackle infectious diseases and cancer. Right now, the company's most notable commercial success is its YSJA rabies vaccine, which is already out there in the market. But LakeShore is far from stopping there. They got a whole pipeline of products in various stages of development, some of which could make a big impact if they get across the finish line. The company has 4 key product candidates currently in clinical development. Among these, there's the Pica rabies vaccine, which aims to offer an even more advanced solution for rabies prevention. They're also working on a Pica recombinant COVID-19 vaccine, an interesting play considering the ongoing demand for COVID-19 solutions in the wake of the pandemic. On top of that, they're working on Pica YS-001, a treatment for cancer, and Pica YS-001, a candidate aimed at fighting hepatitis B, which is still a major issue globally. But the pipeline doesn't stop at clinical development. LakeShore is also exploring preclinical stage candidates targeting some pretty high-demand diseases like hepatitis B, influenza, and even more cancer therapies. And let's not forget about their rabies products still in the discovery phase. With a broad range of targets and applications, LakeShore is positioning itself to be a key player in the fight against both infectious diseases and cancer. For investors, the potential here is clear, but so are the risks. Biopharma stocks are always a mixed bag. There's a lot of innovation and upside potential, but it's a long and uncertain road to bring these therapies to market. LakeShore has a lot on its plate, and while it's making strides in developing important vaccines and treatments, clinical trials and regulatory hurdles are always unpredictable. If you're eyeing LakeShore for investment, this could be a company to watch closely. Their portfolio of vaccines and therapies tackles some pretty critical health challenges, and if even one or two of their candidates hit the mark, it could be a game changer for the company. Just remember, with biotech, patience and a tolerance for risk are key. Our review on AMPX. Amprius Technologies Incorporated is making big moves in the energy storage space, particularly with its high-energy lithium-ion batteries. These batteries are designed for a range of cutting-edge applications, from drones to high-altitude satellites, and the company is also eyeing electric vehicles as a future growth area. In their recent earnings call, Amprius reported some impressive numbers. For Q4 2024, they achieved record sales of $10.6 million, marking a 35% increase from the previous quarter and a massive 170% rise from the same period last year. They're also expanding their customer base, with 98 customers in Q4, including 53 new ones, showing that their products are gaining traction in the market. That said, the company still has its fair share of financial challenges. Despite the strong revenue growth, Amprius reported negative gross margins, with a net loss of $11.4 million in Q4 and a total net loss of $44.7 million for the full year. This is largely due to the heavy investment in R&D and expanding manufacturing capabilities, which, while essential for future growth, are contributing to the current financial strain. On a positive note, Amprius is seeing increasing success internationally, with 77% of Q4 revenue coming from outside the U.S., a huge jump from just 22% last year. They've also landed strategic partnerships, including deals with 2 Fortune 500 companies, which further enhance their prospects. So, while there are still some financial hurdles to overcome, Amprius is clearly on the right track with its innovative technology and expanding global presence. Analysts are optimistic about the future, with price targets ranging from $6 to $10. And if they can keep building on their growth momentum while managing costs, Amprius could be set for even greater success down the road. Our review on LAZR. Luminar Technologies Incorporated is pushing ahead in the world of automotive safety and autonomy with its cutting-edge LiDAR technology. The company designs sensors that enable safer and more autonomous driving experiences for both passenger and commercial vehicles. They've made big strides in production with their LiDAR sensors, and they're expanding rapidly into adjacent markets like aerospace and defense. Looking at the recent earnings call, Luminar delivered some solid growth numbers, but also had to manage a few hurdles. Q4 revenue came in at $22.5 million, a 45% jump from the previous quarter, driven largely by increased sensor sales. This is a clear sign that their products are gaining traction, especially with the launch of new models like Volvo's EX90. On top of that, they're scaling up their LiDAR production by a huge 200% this year, which could lead to better economies of scale and a more competitive edge in the market. The cost restructuring efforts have also paid off, with $72 million in non-GAAP operating expenses cut and $80 million in stock-based compensation reduced on an annual basis. This shows that the company is tightening its belt to stay lean and efficient as they grow. For Q4, Luminar reported a positive gross profit of $12.5 million, reflecting solid cost control despite the challenges ahead. However, there are a few cautionary notes. For 2025, the company has projected more conservative revenue growth of just 10 to 20%, a much slower pace compared to the booming demand they've experienced recently. They also expect negative gross margins for the year, which could put a dent in their profitability. Add to that the geopolitical uncertainties and tariff issues, and Luminar's future isn't entirely clear. Still, with their plans to ramp up production of their next-gen LiDAR tech, Luminar Halo, and their continued push to streamline operations, the company seems well-positioned for long-term growth. While the road ahead might have a few bumps, especially in terms of revenue forecasts and geopolitical pressures, Luminar's focus on innovation, cost savings, and partnerships, especially with big names like Volvo, keeps them in a strong position. For investors, this mix of growth potential and strategic focus on efficiency makes Luminar an interesting player to watch. Our review on OUST. Ouster Incorporated is really starting to make its mark in the LiDAR space, and the latest earnings call reflects that momentum. The company posted $30 million in revenue for Q4, bringing their total for the year to $111 million, a 33% increase year over year. It's their 8th consecutive quarter of growth, showing they're not just growing, they're getting better at what they do. What stands out is their improved gross margins. For Q4, Ouster hit 44%, with a full-year gross margin of 36%. This is a significant jump from last year, showing their cost control strategies and operational efficiencies are paying off. The company's making strides in a competitive market, and their margins reflect that. Ouster's software business is seeing major growth. Software bookings jumped over 60%, and the company secured its biggest software deal, a $1 million annual renewal. Software is becoming an increasingly important part of their business strategy, alongside their hardware. Financially, Ouster is in a good spot. They ended the year with $175 million in cash, no debt, and a solid balance sheet, giving them the flexibility to make investments and scale operations. This financial cushion helps them weather potential challenges as the LiDAR industry evolves. There were some bumps like the rise in operating expenses due to legal costs, but nothing that's derailing their strategy. The company's been smart about cutting expenses where it counts and positioning itself for the future. Looking ahead, Ouster is targeting 30 to 50% revenue growth in 2025, focusing on scaling sensor production and growing their software business. With the LiDAR market heating up, they're in a strong position to capitalize on these opportunities. So, while there are challenges ahead, Ouster's strategic vision, strong financial position, and steady growth make them an interesting player in the LiDAR and tech space. If you're watching innovative tech stocks, Ouster is definitely one to keep an eye on. Our review on FLD. Fold Holdings Incorporated is making waves in the world of Bitcoin financial services by blending the convenience of traditional banking with the excitement of cryptocurrency. The company offers a range of consumer-friendly products, including an FDIC-insured checking account, a Visa prepaid debit card, and a rewards program that lets customers earn Bitcoin with every purchase. Beyond just offering services, Fold also invests in and accumulates Bitcoin for its own treasury, which adds another layer to its business model. The latest earnings call highlighted some impressive growth, especially in their rewards network, and the company continues to expand its reach by partnering with third-party providers to offer users seamless access to buy, sell, store, and withdraw Bitcoin. With the ability to handle direct deposits, bill payments, and early paycheck access, Fold is really trying to integrate Bitcoin into daily life, making it more accessible for everyday consumers. For investors, Fold's strategy seems to be a smart mix of innovation and stability. They're tapping into the rising demand for crypto services, while also offering traditional banking features to ease new customers into the space. The biggest challenge is navigating the inherent volatility of Bitcoin, but with a growing product offering and a solid customer base, Fold could be a strong contender for those looking to invest in the future of finance and cryptocurrency. Please subscribe, give the video a like, and watch more from our playlist. Thanks.